The action, just use Twitter if you want. If you're on it, use the hashtag MKTDAY or email us your money at skynews.com.au. Thanks very much for your company, guys. Julia, I might get your thoughts firstly on, well, we spoke about it just post-lunchtime and we talked about it being a sleepy, sort of subdued market. It didn't really change that much in the end.
A slow, sleepy day, James. The market didn't do too much, down by 0.2%. But I guess a bit of a sigh of relief that we did see some stabilisation after the sharp falls yesterday, where the Australian market lost 1.4%. We saw $3.2 billion worth of stock being traded, so that's less than what we saw on Monday. So unfortunately quite slow, but lots of news to absorb. There was a whole stack of AGMs today. Some of the big movers in terms of stocks that had AGMs, we saw Mincor down by 8.3%. We also saw Real Estate Group down by 3.7%, but Fortescue bucking the trend up by 0.8%. But really, this was another day where the defensive areas outperformed. They were the property sectors, the utility sectors, and the banks. So it was all about high yields and defensives once again. There were some stocks that which reached 52-week highs. Primary healthcare in the healthcare space, as well as Rock Oil, continued to do well, but all in all, a little bit too difficult to read anything into today, given the very light volumes that went through.
You made mention, Julia, a slew of AGMs. One we had today around lunchtime was the Fortescue one over in Perth. And I wanted to get your thoughts. We've got some breaking news just at the bottom of our screen at the moment. Look, worth noting, it's coming from a source, so it's unconfirmed, but that Fortescue Metals has appointed Macquarie on potential asset sales. We do know, of course, that debt had in some quarters been considered an issue. However, they had done some rather large refinancing as well as raising some funds. But look at your thoughts on this report that Macquarie has been listed to look at potential asset sales for the big iron ore miner.
I mean, if the report is true, then I don't think it's going to come as a surprise to the market. We have seen Fortescue selling off some of its non-core assets to deal with the softer iron ore price that we've seen in 2012. We know that they are ramping up their project, but given that prices were lower than when forecast, say, a year ago or 18 months ago, not surprising to see potential asset sales. One of the options that Fortescue may be considering, given the softness in prices and the huge capital expenditure that goes into this project until we see it providing substantial cash flow. Once its project is up and running, at full strength, well, we'll start to see some cash flow through as long as we don't see some more softness in iron ore prices, and we'll see that huge pile of debt really start to decrease. And I guess for Fortescue, this year marks the peak of its capital expenditure. From now on in, we should see that decreasing and some of the debt burden also decreasing relatively quickly as that cash flow starts to flow through.
Seeing index level happening, there was some interesting movements beneath the surface. The likes of CSR coming out with a result which, if you look at the headline, you wouldn't think there was all that much to get excited about, but in the end, CSR, I should say, closing up over 7%.
It was a great performance. I mean, CSR came out and said that the profit was down by 56.5% to $20.4 million, and the shares rallied 7%. But really, I think what the market is looking for is signs that the cycle here has bottomed. We have a look at what drives CSR's business, its housing starts, and we're getting some tentative signs from the housing area. The lending numbers have been showing growth, and now we just want to see that flowing through into the construction area. So some hopes that perhaps we have seen the housing construction market bottoming here. Of course, for the half, it was quite a difficult one for CSR. If we have a look at the residential construction space, it was down by 15%. The commercial construction space was down by 6%. This is a stock that has no debt, so once we do start to see housing starts improving, we should see this company rallying quite strongly. But while we are at the bottom, and we have been at the bottom for quite a while now, and the forecasts for that bottom have just been getting longer and longer, this company has the ability to batten down the hatches. No debt, really focusing aggressively on cost cutting and just waiting for that cycle to turn.
Get your thoughts at the other end of the spectrum. Webjet in the end closing down 15%.
It's not a good time to come out with a profit warning. We've seen that throughout AGM season, as well as some of those late stragglers to report half year as well as full year result. Webjet's came out with a profit warning and the stock down 15%, but you have to consider that in context of the share price rise. This is a stock that's up by 65% in the last 52 weeks. It's been doing extremely well. It's had 17 consecutive quarters of total transaction growth, and really this has been driven along by growth in its international business. In fact, in FY12 we saw 35% growth in the total transaction value in this area. But now it does look like softer economic conditions are starting to impact on Webjet's business. We didn't really get an update in the last result that Webjet came out with. So today we've gotten an update, and it does look like conditions are softer than what the market anticipated, and sold down hard, down by 15%.